Hello and welcome. You're watching IndianOpen right here on BloombergQuint Live. The signing of the trade deal obviously has not sparked any fireworks across global equities, but this was something that was probably already built in. For Asia this morning, let's quickly take a look. We've got gains in Japan and Hong Kong. China trades slightly under by a third of a percent. And the SGX Nifty is absolutely flat right now, so 12,355. It's taking a breather. Since we've already seen a very steady pace, in fact, a very quick pace of making these new record highs that we've seen over the last 1 week or so. So this is actually probably warranted, Neeraj. You take a little bit of a breather, a pause, consolidate a bit. That's a healthy pace of the market.
Yeah, and maybe now we look forward to TCS, HCL Tech and Reliance tomorrow. Back to basics.
Yeah, and yesterday's session was interesting because there is that glaring underperformance that you're seeing from the Nifty Bank in the last 3 or 4 trading sessions, and the index itself versus the largest broader market space. And we've covered that to in an extensive fashion on first one, but clearly it shows in the kind of moves that we're seeing across the board.
Yeah, and I wonder if the derivative space also is showing that kind of activity, Devina, that not just the action not concentrated only in the large caps, but at the broader end of the spectrum. Navneet is here to take us through the FNO setup for the morning. Good morning, Navneet. What is it? Do the broader markets have higher activity?
Good morning to both of you. Yes, we've seen a lot of stocks moving around in the broader markets, but let me start with the benchmark indices first. And they closed off the day's low. In fact, Nifty closed off 60 points day's low, and we did see some unwinding of positions coming by. As you can see, open interest was down for Nifty futures by about 3.5 to 4%, and similar was the case for Nifty Bank, indicating at lower levels maybe there was some buying which was coming in. The premium for Nifty futures was somewhere about 118 points. Very quickly, then today is Thursday, so you got the weekly options expiry coming by, and the setup looks like the maximum open interest on the call side is at 12,400, while on the put side it is at 12,300. But there were signs of fresh call writing coming into the system yesterday. We did see 12,400 call. That's out of the money strike, adding some open interest, while the 12,300 put did witness some unwinding in today's trade. So the range that we're getting for today, I think you should watch out for yesterday's low of somewhere about 12,280 for Nifty, while on the higher side 12,400 will be in focus. And the key point was, I guess, the 12,300 put riders ran for cover. You guys were talking about stocks from the broader markets. Yes, there are a lot of stocks which are moving and which are at least in the futures and options space. So IGL, the gas distribution companies, were in focus. Long positions were seen there. Second straight day of shorting seen for IndianOpen Bank, and NMDC was the other one which was up 4%, and that bunch witnessed short covering. And Yes Bank, by the way, is back into the ban after coming out of the ban period yesterday. Well, FI data, unwinding of long positions and some creation of shorts across the board on index futures as well as index options, so that the trend looks same, but net, I think the positioning is still on the long side. With that, it's back to you guys.
Well, thanks to that, Navneet. And well, Yes Bank shouldn't surprise too many people. It typically does what it does. But let's move on. And before we get in our market guests, a quick conversation with a mid-cap company which came out with a set of numbers. The lower raw material costs and other expenses led to a strong quarter for Plastiblends. Net profit doubled while margins expanded too. Let's talk about that quarter with SN Kabra, the Vice Chairman and Managing Director of the company. Mr. Kabra, good having you. Thanks so much for joining in.
Good morning, Mr. Shah and Mr. Devina.
What aided the quarter this time around, and how sustainable is this performance, sir?
So basically, the main thing has been the product mix change. We've been trying to go to the higher value products, and that has been a major reason. And of course, there has been one factor also that during this first 9 months, we have had about 3.84 crores as interest subsidy from the Gujarat government, which are pending for the last 3 years. That also we received. That is one, of course, one factor. Otherwise, it is because of the product mix. We try to improve this thing. Though the total value remains almost same as compared to last year. Quantity also same. But product mix has helped us to, and this is a continuous process. We are trying to go from the low value products to the high value products.
Okay, so if the product mix has changed, I'm sure it's not a 1 quarter phenomenon, but for the quarters ahead as well.
It's a permanent thing.
Yeah, so would you reckon that this kind of margins that you've posted in this quarter, Mr. Kabra, is a new normal for you as a company, and maybe they can improve as well?
Today, I should expect about 11.5% we can expect on the normal, say, 11.5%. Versus till then, it was about 9.5%.
Okay, so 11.5% EBITDA margins is something that you can expect going ahead, is what you're saying?
Yes, please. Yes, please.
Okay, one other question. What's the guidance that you have for your set of investors? What do you think you can end FY20 with? Do you have any visibility about FY21?
No, of course, as far as the value terms is concerned, I think we'll be about 650 crores.
On the revenue side, yes.
On the revenue side. And profit side, it should be about, say, I will say the net profit comes to about 42 crores.
42 crores for FY20. Any visibility for FY21, sir?
No, at this moment, it's difficult to say anything. But normally I should expect about 15% growth.
Okay. Well, we wish, you don't need to raise any kind of monies, right, Mr. Kabra? You are well funded. You won't need to raise any equity capital in the near term.
No, see, our borrowings have come down in last 2 years. Borrowings have come down from 120 crores to today it is about 25 crores.
Okay.
Yes.
Okay, so you have debt opportunities.
Almost debt-free, almost we can say debt-free.
Okay, great. We wish you all the best for the performance continuing, Mr. Kabra. Thanks so much for taking the time out and speaking to us.
Thank you, Mr. Neeraj. Yeah.
Well, some of the companies that have come out with good numbers, one of them is Plastiblends. I think Den Networks too is the other one. And we'll talk about some of those key result movers in a bit. But there's just this immaculate rally that is continuing in the mid-cap space. And that's the question to Parthiv. He's director at TRACOM Stockbrokers. Parthiv Shah joins us right now on the show. Parthiv, good having you. As always, thanks much for joining in. In the last few days, Parthiv, since the mid-caps have done so well, any promising news item, result that stood out for you? I mean, yesterday was a string of small cap names, but the last few days we've had some interesting mid-cap companies come out with numbers too. What has stood out for you?
See, Neeraj, good morning, Neeraj. And Neeraj, what I feel is that what's been happening is there's been a huge disparity in terms of the valuation call that most of the fund managers you'll be hearing talking about, that in terms of the historical low valuations that currently the mid and small cap companies are quoting at. And let's understand the fact that till date, we haven't seen this string of earnings coming up, and most of the mid cap and small cap companies which are showing better numbers are not due to any sort of past capex which has happened recently or any sort of volume growth. It is more due to things like debottlenecking, things like cost cutting, things like the tax breaks helping their bottom line numbers, and more importantly, I think them becoming very conservative and now I think using the additional cash flow to retrade the debt and reducing the interest costs. So I think this is the trend that we are witnessing, and no doubt I think the balance sheets of lot of mid and small cap companies are a lot better as compared to past 2 to 3 years back. So in which case I think there'll be limitations in terms of what sort of incremental earnings we can expect through these changes. But going ahead, I think it'll be important to monitor which are the type of companies which can scale their businesses, which can scale their revenues and also show incremental volume growth by cornering more market share from their peers. So these are the attributes and aspects that I would like to see in the mid cap companies, not a 1 or 2 type of quarterly numbers which beats its past performance, because we at times have seen that these companies tend to run up due to such numbers and then they tend to correct. But overall, very early days, Neeraj, I would like to see the entire earnings season, how it pans out, and would love to see what sort of earnings come out, especially from the companies which are of market cap 251 till the rest of the pack, because very importantly, this is the pack which has been hurt the most. Almost on an average, there has been a fall of around 30%. And last few sessions, what we have seen is that the mid and the small cap pack, in terms of the index levels, have risen by around 4 to 5%. And some of the companies have risen by 10 to 12%. So it's more like talking about a fact that a 10 rupee stock comes to 5 and that 5 rupee moves to 6. So still we are a long way away in terms of reaching the new highs.
Right. Parthiv, just a quick word on these city gas distribution companies. Yesterday, we had a note from Credit Suisse. Today, CLSA is getting extremely optimistic on it, talking about raw material costs to come off, then uncertainty related to the infra exclusivity to get resolved as well. IGL, MGL, Gujarat Gas, all of these stocks are active. What's your sense?
See, Devana, this is a classic case of a business where I think we're going to see a lot of new investments. And I think certainly in India, city gas distribution as a theme is hugely underpenetrated. That's why it's very easy to pencil in a huge growth number over the next 5 to 10 years. And that's why these reports from these institutional brokerages are coming out in terms of showing a lot of longevity in terms of the annuity business model that these companies have. And we've seen in the past that many of these companies like IGL, MGL, Gujarat Gas, Mahanagar Gas, even Adani Gas landed up winning a lot of new geographies, and they are not only like scaling up their current businesses in the existing geographies which are still underpenetrated, but even the new geographies for which the capex could run for as long as say 2 to 3 years. There is a huge visibility for these companies in terms of scaling up their volumes and working with very decent margins. Unless and until there is any major regulatory hurdle in terms of the marketing margins that these companies earn, I think these companies are in a very, very good position to earn humongous amount of cash flows, which will help them through internal accruals to do the new capex. And most importantly, I think we've seen the fact that if a company wins a particular geography, there isn't a second player which comes and penetrates in that geography, which is very, very useful business model, reducing the competition element.
Yeah, well, positivity all round. MGL in particular had a big surge yesterday. Let's see if that momentum continues. But that's not all. The clutch of names that we need to monitor, and let me go across to our research team to try and talk about them. First, the kind of results that came out yesterday. We spoke to one Plastiblends, but there are others too. Then what about the key stocks in news? And then there's a strategy note that Morgan Stanley's come out with. It'll be interesting to get some synopsis of that. So Nikki, Darshan, as well as Chef Ali join in for that. Darshan, first the results. Let's start off with those.
Yeah, so there are two important numbers which probably will react. Plastiblends you already spoke about. Sterlite Tech came out with numbers just as post-market hours. Not a very good set of numbers. If you're looking at it, the top line was down 11%, EBITDA was down 16%. Margin declined by almost 100 basis points. Now, even if you're looking at the margin, the QOQ decline was on account of the negative impact of operating leverage from lower fiber prices. The net profit was down 68%, but that was mainly on account of a 51 crore exceptional loss that is there to resolve a legacy issue. Order book marginally improved at 8,500 crores, but the management is optimistic. In the conference call, they have said that they believe that the revenue and absolute EBITDA will improve sequentially in the fourth quarter. The other one is DEN Networks, in which revenues were up 3%, EBITDA was up 21%, and margins improved to 18%. Now, the margin improvement was due to lower content cost and placement fees. This time around, there was a net profit of 19 crores compared to a net loss of 32 crores last time around, but that was on account of higher deferred tax expenses of 26 crores and higher other income this time around. Apart from it, the subscription revenues was at 9%, but on the face of it, looks like DEN Networks is a good number and Sterlite a weak number.
Okay, so watch out for DEN, watch out for Sterlite Tech, watch out for Plastiblends, the company that we spoke to, 2 or 3 small names. What about the other stocks that one should watch out for, Nikki, today?
Sure, a bunch of them actually. The first one is DFM Foods. Now we know that the stock has reacted quite a bit in previous session of trade. Some more details emerge out where promoters and other shareholders have executed the share purchase agreement and have transferred the shareholding to AI Global Investment, which has picked up 54% stake in the counter. AI Global Investment is a subsidiary of a US PE firm, Advent. On the selling side, you have the promoters, and apart from that, you have Jwalamukhi Investment and HSBC Bank. Jet Airways, where South American conglomerate Synergy Group, along with Prudent Asset, that's the asset reconstruction company, they have submitted their EOIs. Now remember, the deadline ended yesterday, and that was extended from Jan 6th. Synergy already holds majority shares in the airlines as of now. Interglobe Aviation, now this one is a Bloomberg exclusive, where Qatar Airways CEO has said that they're going to buy as much a stake as possible in the company. Also, we're looking at Sickle Logistics. Yes Bank apparently has acquired in 10.25% equity in the counter by the way of invocation of pledge. Overall, 42.7% equity has been pledged overall for the counter. We're also looking at Gati. Now, this is a bulk deal which has happened. All Cargo Logistics apparently has picked up more than 0.6% stake in the counter. But expect this, keep an eye out on this one, because SEBI apparently has sought some clarification on All Cargo's Gati stake offer. That's a Mint exclusive that we're picking up. We're expecting some amount of traction or some amount of focus coming in this counter on account of this development.
Okay, we'll watch out for this one as well. So a few names to watch out for on the stocks and news front too. What is Morgan Stanley watching out for is the key question. Shefali.
Well, they're also talking about their investment picks for 2020, and their strategy is based on basically two premises. One, growth is likely to improve from here on, and the dislocations in the price valuation across sectors will likely reverse back to mean. So based on these premises, they've actually picked out a few stocks based on three themes. One, domestic cyclicals outperform defensives, value and growth stocks beat quality stocks, and mid caps will likely beat large caps. So they've made a few additions to their focused list. First one is Bharti Airtel, then Bharat Electronics, NTPC, Ultratech Cements, and they've deleted a few. The ones including Bajaj Auto, Jubilant Foodworks, United Spirits, Ashok Leyland. So now after these additions and deletions, so what is their focus list? Value stocks, Bharti Airtel, ITC, HDFC, ICICI Bank, NTPC, M&M, DLF, Interglobe Aviation and L&T. Some of the growth stocks that they like, Motherson Sumi, Reliance Industries, HDFC Bank, MCX, Gujarat Gas. From the mid-cap universe, they like M&M Financial Services, Shriram Transport Finance. And among the domestic cyclicals, they like Maruti Suzuki, Ultratech, Indian Hotels and Bharat Electronics.
Okay, we'll watch out for these. Thanks a lot for that, Shefali. So lots of stocks to monitor in the session today. Parthiv, we've spoken of course about the results and some of the stocks that are moving up. The set of stocks which are also in focus are the aviation companies, the likes of Jet Airways and Interglobe Aviation. Jet Airways because of the two bidders, Interglobe and here, the Qatar Airways CEO saying that they would take as much of the stake in Interglobe as possible. What do you make of these developments?
I think this is a big news, Neeraj, because very frankly speaking, we know that in terms of Interglobe Aviation, it is one of the best run airlines in the country, despite all the challenges that it has been facing of late in terms of their guidance, in terms of the capacity that they wanted to add, which is not going to happen due to the challenges with the engines problem. But I think if at all, the management tends to show any sort of willingness to let go their stake, and especially with the fights that has been happening around. And if a very, very credible name like that of Qatar Airways wants or makes a statement about picking up as much of stake as possible, I think this is going to be huge. I think the reason being that, I think Indian aviation sector does need a lot of capital infusion in terms of the passenger growth that is required, or in terms of the orders that they have done for the lot of Airbus or the Neojets, in which case I think any such capital infusion will really re-rate the entire sector. So interesting times ahead. Let's see what pans out.
Right. Parthiv, Sterlite Tech, were you disappointed?
Certainly, Devina, because in terms of the revenue degrowth, which mainly took place due to bad realizations, and also we know for the fact that we are coming at a cycle where even in terms of the domestic demand, we are not going to see any sort of uptick, especially after what we have seen in terms of the capex that was driven by Reliance Jio. Very few other telecom carriers in India are talking about capex, and even internationally there was a degrowth in terms of the demand. The main reason being China, because in China, especially after the major 4G rollout that they've already done, I think the demand seems to be very, very tepid. And I think even in terms of the order book, which is now sitting at around 8,500 crore, what we are seeing is 56% comes from the services business, which caters to margins of around 17%. And what we are seeing is a huge shrinkage in terms of the margins from the product business, where I think in terms of company used to earn margins of 24-25%, which has reduced to 22%. And even the fiber realization sitting at $5.6 in terms of the fiber kilometers, I think it's going to be staying tepid like this. So I think we are not very upbeat, and I'm really not very hopeful in terms of the management talking about the pickup from Q4, because all the 5G capex that we are talking of, and for which a lot of capex has been deployed by global fiber majors, I think it's still going to take a lot of time.
Okay. Not too optimistic on Sterlite Tech out there. On to a special segment. Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, good morning. What's the stock today?
Morning, Devina. So we're looking at eClerx Services, and there is a negative formation over here in the form of the bearish engulfing pattern. But like we always do, let's first try and understand what this bearish engulfing pattern is and how do you interpret it. Well, it's basically a two candlestick chart pattern wherein we have the second candle, which is significantly larger than the first one, large enough to completely engulf the one ahead of it. The larger is the size of the body of the second candle, the higher is the evidence of a top forming, and you don't need further confirmation. Now, coming back to the the price chart of eClerx Services, and what we've seen is that the stock has been in a sustained uptrend over the last 2 months. In fact, it's gained more than 20% both in the months of November as well as December. But over the last few trading sessions, it has been seeing some amount of consolidation, and the yellow line, which is the 200-day moving average, that has acted as a strong resistance. So multiple times it's managed to come close to that mark. In fact, even on an intraday basis, it has managed to take it out, but has failed to close above that mark. The RSI 2 in the bottom panel is suggesting that the stock is overpriced, and we saw this big fall in yesterday's day of trade. It had been in a sideways trend, but the stock price didn't move significantly on either side. But we saw one big move in yesterday's day of trade. The RSI 2 giving a negative divergence after it had crossed above the mark of 70. So multiple factors indicating that at the current level, the stock may be overbought, and we could see lower levels coming in for eClerx.
Okay. How well has this worked in the past, Yash?
So Devina, it's worked very well, because 3 out of the last 5 times that the bearish engulfing pattern has formed on the daily charts, we've seen the stock fall by as much as 15% over the next 1 month period.
Yash, thanks very much for bringing that to us. Manoj Vayalar, Vice President of Derivatives at Religare Securities. He's joining us right now. Manoj, good morning. Great to have you on the show with us. Today is the weekly options expiry day. What is it that we're going to be watching out for closely in terms of the index?
Yeah, good morning. Yes, it is a weekly expiry. Now, there are 2 things that we generally look into. We look into what the monthly rollover dictates, at least for the first fortnight of the Jan series, and then we club it with the weekly expiry or the data that we get, especially from the prop desk and the FR desk. Now, unfortunately, we believe that 12,400 might act as a resistance, and the Nifty might correct to maybe 130 to 140 more points on the downside. So somewhere close to 12,220 to 40 is where we believe the support or the weighted average price of this entire rally, which started from, let's say, 11,900 almost to 12,500 is. The irony here is when we started this contract of Jan, both the indices, the Nifty and Bank Nifty, they shied away from carrying the position from December to Jan, and ideally what happened is it is off lately somewhere close to these levels of 12,250 that the Nifty managed to add fresh long built up, and there was good amount of call writing which is happening at 12,400. Now we have an impending election, we all know that, the union budget, but before that we believe that like we saw the Bank Nifty correcting yesterday to almost 360 odd point. Today there is fair bit of possibility that the Nifty futures would correct. So the better strategy here is you short the Nifty futures somewhere close to 12,370 to 380 odd. Keep a stop loss of around 12,460, and we are expecting a target close to 12,250. Now for people who can do not really want to get into a future strategy because of the M2M involved, because today's expiry, you can simply go for a 12,350 put option, and you can hedge it with a 12,400 call option. So that's a good combination. Around 34 rupees you can do it. The target should be around 70 rupees on that.
Okay, that's on the index. So Manoj, what about individual stocks?
Stock specific, as I was saying, we are expecting some correction in the index, and I'm afraid we do not believe that the mid caps and the small caps, which a lot of people are anticipating, might outperform. It might not really happen because we are worried about the debt money which is moving out, and generally when the debt money moves out, we see the correlation happening in the equity indices, especially to banks, and that is when the entire stocks comes in. So but then still, because it is expiry and there is some buying which has happened off lately, so we boiled down to 3 stocks. We like NTPC, the stock has shown good buying also. There is a good VWAP concept. VWAP concept is nothing but a volume weighted average price, where the delivery cash volume and the derivative open interest, they work in tandem, so that helps the follow-up buying to come in. So 122 to 124 is where we recommend buying the stock with a stop loss of 116. The target should be 134 on that. We would recommend shorting IndianOpen Bank again, but the level should be somewhere close to 1480 to 1484. If you get that level, that is where you short the stock again, 1522 as a stop loss, and the target comes back to a 1420. And the third stock we like is Adani Power. So basically power sector to be on the long side. Some on the pharma, but the pharma still will take some time, so we are not really vouching on pharma as of today because today is the expiry. So Adani Power is also a long at let's say 63, a stop loss of 59, and we are expecting a target close to 72 on that.
Okay. Manoj, the last few days we've actually seen the bank Nifty give in a bit compared to the index, not been really supportive. Do you feel there could be further pressure on the Nifty bank?
Yeah, absolutely. See, the way it works is, I guess almost 34% of your Nifty contributes of banking stocks, and in Bank Nifty, the 4 stocks, that is your Axis, SBI, HDFC, and ICICI Bank, these contribute to around 80-81%. Now, there is a good pair trade what happens, especially from the FI desk also. A pair trade is generally when you buy an index and you short an index to get the correlation between them. So, we are somewhere close to a 2.58 if you simply divide Bank Nifty by Nifty. So, I am afraid we believe that 31,500 to 31,630, that would be the levels where the Bank Nifty can correct to, and the resistance at the Bank Nifty again comes somewhere close to a 32,350 to 400 odd. So that's the level the Bank Nifty is very prudent to go short for a good 800 points on the downside. So 31,500 or 560 on futures, that is where I guess we might see some follow-up buying coming in Bank Nifty, and possibly that would be the levels of Nifty close to 12,250. So it's a sell on rise for both the Bank Nifty and Nifty for us, at least in the short term.
Yeah. Sameet, Chavan is with us, and Sameet, since we're on the topic of the index, just one minute left for pre-open. A quick summary of what your trading position on the Nifty would be.
See, Neeraj, we would stick to our buy and decline strategy, and it has worked well in last couple of months. We have seen all depths, 300, 400 points that are getting bought into, and recent correction that has come towards 11,900. We have seen a V-shaped recovery. Yes, we expect continuation of this move. 12,400, 500. These are the next levels to watch out for. Not too far away, but we don't expect the move to be as swift as it has been in the recent past. So we believe slow and steady move towards 12,400, 500, and individual stocks have been moving since last few days, so that outperformance is likely to continue. For the Nifty, any dip towards 12,315 for the day would be a buying opportunity. 12,270 would be a stop loss level, and we expect Nifty heading towards 12,390.
All right, we'll come back to your stock idea, Sameet, in just a few moments. Just looking at the pre-open, we're going to kick start it in the next 23 seconds. It could be a flat open, looking at what the SGX Nifty is doing. Hang Seng gives back a bit, so now it's absolutely flat. Nikkei 225, that's also marginally lower from the last time we took a check. Shanghai continues to trade with cuts of about 1/3%. We've got the SGX Nifty at 12,356. That's a marginal dip of just about 3 odd points. Pre-open there on your screens. Nifty 50 opens flat, and so does the Sensex. No material change out there. It's all about stocks the last few days, and probably will continue to be. Tech Mahindra 3% lower. You've got Hindalco down 2%, Tata Motors down 1.5%, Vedanta, Z, Bharti Airtel are some of your other losers. Coal India, HCL Tech at 593. TCS 2 looking weak. ICICI Bank at 534. Maruti Suzuki 469. These are some of your losers. Grasim down 1%. No major bulky cuts that you're seeing across the board. Gains coming into Yes Bank, 40 rupees now for the stock. UPL is up 1.5%. Sun Pharma, Hindalco, IndusInd Bank, Titan is now approaching 1,200. HCL Tech at 598 now. HUL at 2,030. Adani Ports up 0.5% too, and Reliance Industries up 1/3%. So the index is pretty muted. Stocks also no material changes in terms of gainers or losers this morning. But for the currency also, 70.78 is what you've got. Marginal move there on the rupee.
I wonder if the stocks in news are reacting. So Sterlite Tech, Den Networks and Plastiblends. Sterlite Tech, the bottom line miss are probably hurting the stock. The first ticks are not the most positive. Let's wait and watch if the market likes the margin performance and the stock recovers a bit. Plastiblends, a small cap stock. Den Networks up 5% on that robust set of numbers. So that stock is reacting duly to its results. Plastiblends about 1.5%. Not a bad set of numbers, but reacting. And maybe a stock like Edelweiss, etc., are moving around a little bit in trade. Last but not the least, we'll revisit some of these stocks, but Indigo is showing that uptick on this news that Qatar Airways CEO has said that they would love to take as much of Interglobe Aviation as possible. All over the place, but could be interesting. Jet Airways could also be active in the session. For now, no. Just 2 bids received. Maybe that is the disappointment. But let's wait and watch what happens during the course of the morning. So a few stocks that you got to keep in mind in the session today. Now, before we get to Sameet Chavan's stock ideas, I just want to get back to Parthiv. Parthiv, if you've already spoken about Sterlite Tech, then I would also want to throw in Tejas Networks in the mix, because that stock, due to receivables issues, was languishing. They've now started saying that they are starting to get some receivables. So what's your view here on both of these names, and how would you choose between the two?
See, very frankly speaking, even in case of Tejas Networks, it's going to be very difficult road ahead, at least for the next 1.5 years. And the reason why I'm saying this, Neeraj, is because I think Tejas Network lands up doing a lot of business with BSNLs of the world, Idea Vodafones of the world, even Bharti Airtel and Reliance Jio. And except for Reliance Jio, we haven't seen any sort of massive capex coming from the existing telecom carriers. And today is going to be a very important day in which I think a lot of these telecom carriers will get to know what sort of liabilities and penalties regarding the AGR they have to pay. And we know for the fact that despite the QIP raised from Bharti Airtel, it's still going to be extremely difficult from them to go all guns blazing trying to deploy their 5G network. And Tejas Networks will face a lot of competition from Chinese players like Huawei, Cisco's of the world. So I think I'm not extremely bullish on such companies where I think the technological changes happens overnight. And though they have had a decent past track record, but going ahead, I think it will be very challenging for them.
Okay, well, speaking of that, I know we marked Bharti Airtel at the beginning of the show, but this FTSE rebalancing, not the biggest of pieces of news, but it might bring about some buying. Let's wait and watch if Bharti Airtel reacts at all in the session today. Do watch out for that one. Do watch out for the gas companies as well. GAIL is top of the pile in the session today as well. A couple of stocks on which there are some interesting queries, one technical and one fundamental. So first, the technical call. And Sameet Chavan, before your stock recommendations, just a view on L&T Finance Holdings, because of late we've seen some of these NBFCs start to make a move. This one has results coming out as well. How do you approach trade out here?
See, Neeraj, although this stock is trading around its crucial juncture of say 127, 128, over the next couple of weeks we would expect a gradual move, continuing probably towards 135, 137. So one should trade with a positive bias, and recently we have seen 3 weeks consolidation in the range of 120 and 114. Stock has already broken out from this range. So from here on, this northward trajectory is likely to continue. So 135, 137 remains to be an immediate resistance. So on the low side now, the previous resistance of 120 is now likely to act as a very strong support.
Okay. And Sameet, what about your stock recommendations for the morning?
See, I think we'll go with mid-cap ideas. If you recall, last Thursday also, we were highlighting how mid-cap index is shaping up. It's on the verge of a breakout, and we have seen a good outperformance from the broader market. So from here on, this upward trajectory is likely to continue. We have seen underperformance of nearly 1.5 to 2 years from mid and small cap basket, so that they have to compensate a bit. So we expect this move to extend. We would go with 3 ideas. First one would be PVR, which has been a steady mover, a series of higher highs, higher lows, and now yesterday we saw a decisive breakout from a bullish flag pattern. So from here on, PVR is likely to continue its up move. 1985 would be our immediate target. Can be bought with a stop loss around 1895. Second buy would be on Castrol. It has been a laggard of late, but yesterday's price action was quite encouraging. Stock has broken out from a falling wedge pattern along with sizable volumes. So that suggests, at least for a time being, this stock is likely to give some relief move. Can be bought for a target of 139. Stop would be around 130. And from the broader market, we like Granules, which has been giving decent moves since last 3 months. And we have seen a consolidation breakout yesterday along with good volumes. So from here on, Granules is likely to continue its move. 152 would be a near-term target. Can be bought with stop around 131.
Okay. Manoj, I want to come to you on IndusInd Bank. What are the positions suggesting? Last 2 days heavily sold into. Do you believe that there could be more shorts getting built for IndusInd Bank?
Yeah, absolutely. I guess even yesterday there was good amount of at least the derivatives that are happening, and obviously there is good cash volume that happens generally when a stock comes up with the result. So we believe that 1482 roughly is the weighted average price at which the shorts have been built up. So when you get a bounce, always try to get into the weighted average price, because that helps you, especially because when you're using a futures, the M2M does not go against the trade. So 1482 is where we recommend shorting that. The stop loss should be 1520 and the target should be somewhere close to a 1428 on that. We like one more stock, if I may say that, from the FMCG sector, Colgate Palmolive, we would recommend buying that also somewhere close to a 1510 in that, with a stop loss of 1470 and a target somewhere close to 1568, 1568 as a target. FMCG, there are a couple of stocks, but then we believe that Colgate Palmolive might see some follow-up buying in today's trade as well.
Yeah, well, that is certainly one stock that has seen some active interest the last few sessions. Keep this one at the back of your mind. Parthiv, the dealing room chatter suggests that Colgate Palmolive volume growth numbers might be better. We know that the new management is focused on volume growth as opposed to margins. If they come out with a volume growth number which is exciting, but the operational metrics don't hold up as much, would you be disappointed, or would you cheer that strategy?
See, Neeraj, I think these companies are extremely smart. I think at a point in time where they are talking about an aggressive volume growth, and yes, I think at times it comes at cost of lower gross margins, but then what they tend to do is they tend to tinker with their ad spends, and that's where they'll end up getting the EBITDA margin numbers at par with what is the consensus estimate. So not really worried about in terms of the operational performance. Yes, I think the only slight concern is that what we've seen is this has been an outperformer. The stock has rallied a lot, almost 30%, and at this current valuation multiples of almost 52 times, I think it will be important to see what is going to be their commentary, because many other peers in the FMCG space are talking about the private consumption relatively slowing down, and especially the rural growth, where I think we are relatively bullish in terms of the post good monsoon and good rabi crop season. I think definitely it should bode extremely well for likes of Colgate, where they are definitely targeting the rural strategy, and of late I think they've done a lot better in terms of facing off the competition from Patanjali's of the world.
Sameet, a quick word on HDFC Life, SBI Life. What would you do with these stocks?
See, I think they've slipped into a consolidation mode after enjoying a strong run for nearly 5 to 6 months. So as far as an HDFC Life is concerned, we expect this consolidation to continue. Very on the higher side, 640 is likely to act as a very strong resistance, and we expect a gradual decline probably towards 680, 580, 600, 580.
Okay, 600, 580. Watch out for that one. Weak the last few days. Let's see if it recovers a bit, or does it succumb to some selling pressure. Manoj, before we thank you, if you had to bet on one key name for the session today, or one key trade for the session today, which one would that be?
I think I would simply go with the long angle, which I said. I would buy a 12,350 put option for the Nifty and combine it with 12,400 call option. I'll try to buy it between 26 to 28 rupees, because the VIX is close to 15, so there is a simple match on that. So we'll try to buy it between that, and the target should be somewhere close to 68 rupees on that. So I guess a factor of 1:2.5 is what we can expect in today's trade.
Right, Manoj, we leave it at that. Thank you very much for joining us this morning. All right, we're just minutes away from market opening, and we tell you all that you need to know to stay ahead in trade today. A 7th straight month of fall in imports has led to the trade deficit narrowing more than estimated in December.
Synergy Group and Prudent ARC are the only two bidders for Jet Airways. Two people in the know, tell BloombergQuint.
AI Global Investments, Cyprus PCC has acquired 54.1% stake in DFM Foods. HSBC, Jwalamukhi Investments and promoters were the sellers.
Amongst the key results, Sterlite Tech's revenues and operating margins fall in the third quarter, while a higher other income leads to Den Networks reporting a profit compared to a loss in the last year.
In key bulk deals, All Cargo Logistics acquired another 0.64% stake in Gati. On the other hand, Paradise Global Fund sold 0.54% stake in Tata Global Beverages.
And lastly, Bharti Airtel, BEL, NTPC and Ultratech are added to Morgan Stanley's focus list, while Bajaj Auto, Jubilant FoodWorks, United Spirits and Ashok Leyland are removed from that list. Okay. It's an interesting set of names that Morgan Stanley is talking about as well. Parthiv, just one quick word. Would you read too much into this news flow that came in on one of the wire agencies yesterday about a urea decontrol? It just seems very difficult a move to enact. Would you try and bet on companies because of that, or would you leave them alone at the pre-budget rumor?
Not really, Neeraj, because this is something which we have experienced it every year. Right before the budget, a lot of rumor mongering in terms of what the government will do or many reforms that will take place. But this is not a rumor that we would like to act on. Yes, we have been bullish on this space, but very selectively. And the stock that we like is still Coromandel International. It is, even after the run-up, it is not very expensive. And more importantly, it has this element of complex fertilizers, which I believe going ahead, the demand will improve. And even a lot of southern states where they cater to, I think over there the sowing has been quite healthy, and going ahead the farm incomes are set to go up, which will definitely help companies like Coromandel International, which have managed their balance sheets and inventories extremely well.
Okay. Parthiv, take a moment to thank you for joining in today and giving us your thoughts. As always, really appreciate your time. Well, that's the view from Parthiv Shah of TRACOM Stockbrokers. A minute and a half left because the market's kickstart trade. One stock which is trading at close to fresh highs for itself, Sameet, Chavan, and that is Trent. Quick thoughts here.
See, clearly it's on a roll since last many weeks, many months now. Recently we saw some consolidation. Again, this stock has come out of its recent consolidation. So if we look at the volume activity at all-time highs also, we are seeing strong buying interest. So from here on, this move is likely to extend. So minor dip probably towards 575 would make it a good risk-reward ratio. Can be bought around 575 with a stop around 562, and target would be around 598, 600.
Track KPIT Tech, Sameet.
Generally, we don't track this counter considering its volume activity, but in last 3 days volumes have risen substantially, and the overall price action has been quite encouraging. So from here on, 110 a move towards 110 cannot be ruled out. Fresh buying is not advisable considering its sharp move in last 3 days.
And your top call for the morning?
See, I'm tempted to go with PVR, but I'll certainly go with Granules because stocks from the broader market have been buzzing since few days. So I'll go with Granules, target 152, stop would be around 131.
Sameet, Chavan, we'll leave it at that. Thank you so much for taking the time out and giving us your thoughts. And Granules India is Sameet's top call for the morning. But, well, the markets are slated to start off on a flattish note. This is, well, build-up was with a bang. The end to the trade deal signing has been a bit of a whimper, really. The last 2 days, we haven't seen any kind of material move. In fact, yesterday was a down, and today too is starting off very, very flat. The mid-cap and the small-cap end of the market will also come up on your screen. The last few days has been one of outperformance, and today seems to be no different. So as long as the markets are not correcting too much, the broader markets might probably just continue. For now, they look like they're continuing. Let's get the heat map up on the screen. More green than red, though. You got to keep that at the back of your mind. What is not doing well are a very few stocks. Vedanta, Tata Steel. So I think the commodity-linked names are under a bit of pressure. Not pressure really, but just correcting a bit. Tata Motors. So the globally linked names are all coming off. ITC's come off a little bit. But that's about it. We don't have too many other stocks which are correcting too much. What is doing well, though, is the other interesting bit. Yes, Bank up about 1.5%, but GAIL has seen some notes, some optimistic notes the last couple of days, so that one is doing okay. IndusInd Bank showing a semblance of sanity after 2 days of sharp cracks, but Bharti Airtel is up nearly 1%. It gets added to Morgan Stanley's focus list. More importantly, the FTSE rebalancing might also get some flows there, so that is doing okay. RIL is doing okay. Remember, I think the AGR case verdict is due today, so that's the other interesting bit. And the likes of Power Grid and Z seem to be doing okay for themselves. Just a couple of pockets that I want to highlight very quickly before I hand it over to Devina for what's happening across the broader end of the spectrum. Firstly, companies that are in focus because of news flow there, or stocks which are near 52-week highs. So Trent, Tube Investments, Polycab, all three stocks had a big surge yesterday and were trading close to 52-week highs, and they continue to do well. Tube, in fact, starts off on the 4.5% in the green today. What about companies which are in news? Interglobe Aviation, Jet Airways. Jet Airways actually is not fallen, which is interesting, but Interglobe Aviation up 4% on the market would like to believe that there is interest for Interglobe and therefore there will be a reward. Starts off well. Let's see how it shapes up. Devina.
Tech and Den Networks should watch out for both those names on the back of numbers. Den had a decent quarter, not so much so for Sterlite Tech. Stocks down about 3.5% plus at 126. Den Networks is the other one to watch out for. A steady quarter of sorts. The stock's up 4.5%. Viatech Barbag has moved up 7% this morning, so that's looking strong at 228. ITD Cementation, that's up at 64 rupees now. MTNL continues to do well, so adds on another 5% today. That's another stock to watch out for. MMTC, Indiabulls Real Estate. Avanti Feeds 722, and this one just doesn't die down. The interest just keeps building on a daily basis. Stocks move from 580 odd just a few weeks ago to 724 now. So that's the kind of move that you're seeing in some of these names. Not just Avanti Feeds, Apex Frozen Food, What a Base, all of these names extremely active. Bajaj Electricals, Shipping Corporation, Walk Hard, then you've got PTC India, Prestige Estates. Yesterday was up and active, today again is up in the session. I should also pull up a Godrej Properties. That's slightly subdued compared to the rest of the real estate pack. Over the last few days, not been doing a whole lot much, but today a marginal increment of about 1/3%. 911 stocks advanced, so you've got 272 stocks which are trading in the red. Saurabh Mukherjea, no better time to get him in, founder at Marcellus Investment Managers, joining us right now. Saurabh, good morning to you. Great rally. Timing has been good. We've, last 11 days of losses were recovered in a matter of 3 trading sessions. Pace has been good. Globally, things have quietened down a bit. Is the environment conducive to help us make and scale larger highs or higher highs as such?
I think we've discussed over the last year or so on your program that typically in India, almost all the economic reform takes place in the 2 years following general elections. Typically, before general elections, very few governments do anything meaningful by way of reform, and almost all the economic reforms we've seen since '91 has come in the 2-year window following general elections. And again, typically reform comes when the economy is in the doghouse. So we are in that point of time in our political cycle when weak economics should lead to positive reform movement, whether it's in the budget or thereafter. My reckoning is that will continue to be the main driver of upward momentum in the Indian market. All of us know that the financial system is in the intensive care unit, continues to be the intensive care unit, and in spite of that, we are continuing to see upward movements in the stock prices. I think this paradigm will sustain for most of 2020. Weak financial services sector, sluggish growth, but at the same time a government which will try its best to deliver economic reform and keep the stock market buoyant.
Is that the only thing? Because so far the macro numbers are not worrying or spooking the markets any more in the US than they are in India. So everything is going well for the equity markets. Obviously, this is a well-known liquidity-driven rally. No fundamentals to support it. Earnings momentum. Obviously, yesterday we spoke to Adrian Movat, and he said that the EPS growth has been coming in. You have been seeing earnings picking up, but not as much as you would have anticipated to see at a record high like this.
Devina, there's very little similarity between what's happening in America and India. America's economy is in good shape. There is very little economic reform in America, but the economy is booming. The unemployment there is at, I think, 25 or 30-year lows. The Federal Reserve has flooded the US system with liquidity. Equity inflows are strong in America. You couldn't really describe a better economic condition for the United States. Our economy isn't booming. Our financial system is in significant trouble. The only thing firing in India is policy reform momentum. So superficially it looks similar because PE multiples superficially look elevated, but in reality I don't think India and America have decoupled quite so significantly in the last 20 years as they have now. It's fundamentally different paradigms. booming economy in America, sluggish economy in our country, weak financial system in India, booming financial system in the United States. So there's very little similarity. Our paradigm, the Indian paradigm, will continue to be economic reforms which force the economy basically into the hands of 50, 60 companies. In every sector, you end up with one or two dominant leaders who scoop up the lion's share of spoils in the sector. And people like us at Marcellus, our job is to identify those one or two sector leaders across sectors. And that is, in a way, that will be India's story over the next, I think, decade or so. A polarization in the economy, which forces the economy into the hands of one or two sector champions, whilst thousands of smaller companies fall by the wayside.
Saurabh, good morning. Neeraj here. The first 15 days of the new year are showing us some pullback in the, not necessarily the top one or two, but the others. You reckon this will die down soon?
Bottom feeders.
It's difficult to say, how much one should read into short-term stock price movements. The paradigm we've used in Marcellus for a long time is we look for companies with very high barriers to entry, return on capital significantly above their cost of capital, which in turn implies very strong cash flow generation. I struggle to find more than two companies in any sector in our country, whether it's shoes, whether it is paints, whether it is biscuits, whether it is cooking oil. Almost every sector you see in India, you'll see the top one or two make return on capital well above cost of capital, thus generating free cash flow, and the rest of them barely get by. And that rest of them who barely get by, they are the guys in the doghouse now, because in the absence of free cash flow generation, there really is no other money available for you to fire your growth engine. And the entire policy paradigm, whether it's GST, whether it is the tax cuts that were announced by the FM recently, whether it is potentially impending land reform, all of that is very productive, very conducive for the top two players, less conducive for the rest of the sector. So I'm not so sure how much we should read at recent stock price movements. That's neither here nor there. The underlying economic construct seems to be very, very positive for market leaders and very difficult for laggards in this economy.
Okay. Three pockets, and I'm not asking you to comment on all the three, but choose one. All three have namely two or three companies only, and all three of them therefore could be market leader at some point of time and not be market leaders, under a spot of bother but seeing some policy action or growth. Telecom, oil marketing companies, aviation. What do you do in these pockets? Because these are the only leaders that are there, each facing an issue.
Sure. So I think if you look at our country, sectors where the government, the polity has had a big role to play, and you can look back as far back as 91, sectors where the government or the polities had a big role to play, it's very difficult for minority shareholders to make money. You've got sort of two paradigms at play in this sector which are very destructive for minority shareholders. One is the state, the government itself saying, through license fees, through regulatory fees, I will suck out the free cash flow of the sector. And the second is the promoter engaged in a perpetual battle of wits with the regulatory system and a tussle between the promoter and the regulatory system. These two things make investing in sectors with heavy governmental involvement I think very risky for minority investors like us, and therefore we've stayed clear. I'm sure there'll be maybe 1 or 2 year bull runs in some of these sectors that you mentioned, but I'm not so sure how much money a long-term investor will make here. Great excitement, good fun to watch, but very little money to be made.
Okay, Saurabh, I want to come to you on smaller spaces. I mean, when we're talking about FMEG, you're talking about pipes. If you talk about exhibitors like Inox, PVR, these are a few themes that have worked well. Specialty chemicals, for that matter, even these shrimp-based companies suddenly look extremely attractive, and there's the beeline of investors looking to invest in them, and that's why the stocks in 3 months have rallied about 100%. Do you think that this is just temporary? And like you said, everything is going to go back to those top 10, 15 stocks? Because these companies are also not doing bad in terms of delivering numbers.
So I think the answer is a partial yes, in that you can build strong, sustainable franchises in several of those smaller sectors you just mentioned, Divina. So an example of a small franchise from 20 years ago, which is now a big company, is Pidilite, right? Pidilite today is what, the best part of $10 billion in market cap. 20 years ago, it was a pretty much a monoline company, largely making adhesives. Now it's a dominant player in construction chemicals, in sealants, potentially going into more generally into a dominant market leadership mode in construction chemicals. So similarly in pipes, a decade ago, very few people had heard of Astral Poly. Now it's a prominent company, and it has shown, Astral Poly has shown, that you can build moats. You can build moats in the pipe sector. On the other hand, I don't think multiplexes, I can't see the moats in multiplexes, and neither can I see the free cash flows of the two exhibitors you mentioned. So if you take the basic definition that people like us, we need to look for companies where return on capital is well above cost of capital, thus generating free cash flow. On that basic smell test, pipes passes, at least the top 2 or 3 pipes players pass. A firm like Pidilite or an Asian Paints passes, but the exhibitors don't, the airline companies don't, the telecom companies don't, and that therein you have the answer as to where will a minority shareholder make money and where will they not make money. Share prices per se don't mean much. I completely agree with you. Whether PVR share price has gone up or down in the last 12 months is neither here nor there. But PVR's cash flows do tell you a story, and similarly someone like Astral Poly's cash flows tell a very different story of a moated company with very strong free cash flow generation. By the way, neither PVR nor Astral Poly are in our portfolios. I was just using them to illustrate the point about one type of franchises, pipes, where there is moats, and exhibitors where I can't see the moats.
Okay. Just I want to understand the city gas distribution view from you for some of these companies. Is it just the fact that we've got some government support coming in, or is it just a seasonality factor where these stocks come into favor and then suddenly they're back of mind, not top of mind?
Yeah. So obviously, I think very interesting sector. I agree with you. City gas distributors is a very interesting sector because at one level you can see urbanization dynamics playing out positively for these firms. And as you also said, the fundamentals look pretty promising. There are genuine free cash flows there. The worrying aspect, which has sort of kept us wary of this space, is governmental interference. The Indian state has a long and undistinguished track record of interfering wherever it sees companies making lots of money, and that's kept us wary of getting involved in CGDs. But on the face of it, the underlying dynamics are very positive. You can see the growth runway. You can see the free cash flows. Incremental capex that the city gas distribution companies should need to do shouldn't be that much. The fly in the ointment is potential adverse governmental interference.
You've been helping us identify these few gems for quite some time now, Saurabh. Anything that you have identified as something that could be one of the larger value creators that we haven't already discussed for 2020?
I think we discussed potential. We discussed Divi's Lab off and on last year. It's in some of our clients' portfolio. But the more we have looked at this company, the more we've become convinced that Divi's Lab potentially is a massive cash engine which can last for a long time, where the growth runway is big, the cash generation is punchy. I think ROCs are 37-38%. Which suggests a very punchy free cash flow generation, and alongside that they've had double-digit growth for the best part of 20 years. So dominant franchise globally in painkillers, in four APIs which are essential for consumers around the world, not just in India. It's a dominant franchise not just in India but on a global basis. They've very smartly stayed out of the formulation market. They've very smartly stayed out of confronting big pharma in the West head-to-head. They're suppliers to big pharma in the West. So pharma in general is a beaten down sector. I'm not so sure how many Indian pharma companies have it in them to stage a sustainable recovery, but Divi's Lab looks to us to be potentially what we call a consistent compounder.
Great, Saurabh. Thanks very much. Always a pleasure chatting with you and picking your brains.
Thank you very much. Thank
You know, it's interesting that Divi's Lab's second largest market cap in the pharma space as well. One wouldn't think of it as much, but yeah, it's surprising the way the stock has moved as well. Pretty interesting move there.
Yeah, a lot of these stocks that Saurabh has been identifying with us on the platform have been churning out decent returns.
Yeah, they have. Well, just speaking of returns, before we take a break, Avanti Feeds, we've already marked up 4%, but Prestige Estates is the real showstopper today, up about 6% at 382, knocking on fresh 52-week highs again. Apollo Hospitals, we marked in the dealing room chatter yesterday. It's up another 4%, trading at fresh 52-week highs or life highs. And Trent continues to roll on, up another 1.5%. Speaking of Divi's, by the way, that stock is at fresh highs too. So you keep that at the back of your mind. But need to slip into a break. Coming up, we decode earnings and a segment which is doing well. So speak to Sterlite Tech's Group CFO Anupam Jindal about the issues in the quarter and talk to N. Srinivasan of India Cements to understand the pricing power and whether it's sustainable.